Hey there! Welcome to Canuck Investment. In our first video, we're going to take a look at how you can keep up to $70,000 in tax-free money. This registered account is called a TFSA, which stands for Tax-Free Savings Account. Cash deposited inside a TFSA will grow with interest over time and let you withdraw it later on without the fear of the tax man knocking to collect his cut. Anyone in Canada the age of 18 or older with a valid social insurance number can apply for one at any financial institutions that offer it, such as banks or credit unions. A tax-free savings account is truly a wonderful thing, an absolute gift that should be taken advantage of by every capable person. It has only recently received its deserved recognition, no thanks to a misleading name from very imaginative politicians. A TFSA is more like an umbrella that allows you to hold not just only cash in a 2% interest savings account, but also stocks, bonds, mutual funds, GICs, and more. Tax-free, meaning whatever interest or gains you make from your holdings and investments under this umbrella, big or small, can be withdrawn without the fear of a cut. However, there is a catch. You can open multiple accounts under your TFSA umbrella from different institutions, but you cannot exceed the contribution limit. That means if your contribution limit, the amount of cash you can deposit, is $38,000, the accumulated contributions from all those accounts cannot go over that cap limit of $38,000. At least not until next year. Let me explain. Since its inception in 2009, the TFSA contribution limit has increased every year at varying rates and will continue to grow year after year. But at the time of this video's creation, in 2020, the contribution limit since its creation is $69,500. Your contribution limit, however, will depend on your age. The room for your contributions opens once you turn 18 or will open at 18 if you haven't already. Add together the year of your 18th birthday and every year after and you will get your ceiling. For example, if you turned 18 in 2009 or before, your contribution room is the sum total of $69,500. If you turned 18 in 2014, the yearly contributions from 2014 and forward added together will be your contribution limit at $44,000. But whether or not you turned 18 last year or last decade, once you hit your contribution limit, you will have to wait until next year for the new yearly limit to kick in to add more to your accounts. If you exceed the contribution limit, the government will tax you for overcontribution at a 1% rate. It would be best to keep track of your deposits and make sure this doesn't happen, as it defeats the purpose of this wonderful tax break incentive. But absolutely, positively, the best thing about the TFSA is, while there is a limit on how much money you can deposit, that limit is not a threshold on how much your TFSA can hold. That's right, your contribution or the deposits of cash you make is limited, but the return from your investments aren't. You may have maxed out your contributions at $69,500, but if you did your due diligence and made the right choices with your investments for a finalized return of 40%, your TFSA could be worth over $97,000, and all those gains you made can be withdrawn tax-free. There's a limit on how much you can deposit, but not on how much you can reinvest your earnings already under the umbrella. In fact, there are some Canadians who have a TFSA worth 6 figures, and an even smaller handful of Canadians that have a TFSA worth $1 million. Yes, $1 million, tax-free. But while that exclusive group is no doubt a badge of honor, it's also followed by some deeply curious questions from the taxman about that amassed wealth. Is $1 million of tax-free money worth the hassle? Maybe, but it demonstrates the massive advantages a tax-free savings account is capable of. In fact, a TFSA is a bit more complicated than this initial introduction, but we'll go over this in future videos and even show you how some people have contribution limits of $100,000 and more. But whether you want to save more for a retirement, have a bigger emergency fund, or even incorporate it into your regular banking, this umbrella gives a steady upper hand to all Canadians and is definitely something I suggest you take advantage of. Anyways, that's it for this video. Like, comment, follow us on Instagram, and subscribe to our YouTube channel so you don't miss future videos. Canuck Investment.